Hi, everyone. It's Will, aka Dr. Financial Literacy. Today, this is section 5, continuing with 5 sections of the HELOC that I just obtained on April the 9th, which helped me to wipe out a 30-year mortgage in about 2 months. So these are the parts that I've discussed in parts 1 through 4. We're going to continue with 5. These are not set up necessarily like this in the application. I just broke it up into 5 pieces per day to try to give you an overview of what I recently experienced within 30 days ago. So looking today, as I mentioned, today we're looking at plan unit development section, uniform residential loan application, uniform lender loan information, furnishing of negative information, credit reporting companies, and also signature of affidavit and AKA statements. I'm gonna kind of switch it around a little. I'm gonna take this part number 2. I'm gonna go ahead and take that last since it's the longest piece of it. So the property that I had placed a HELOC on is a townhome or townhome in general. So it's a part of a planned unit development because it's a single family home, but it's a planned development where you have units that are together wall to wall in general, and that's what they consider a planned unit development rider. The HELOC company placed this on there for their protection in general is a part of the security deed. And I'll just read just the first paragraph. The planned unit development is made on this day, the 9th day of April 2024, and is incorporated and shall be deemed to amend and supplement the mortgage deed of trust or security deed, the security instrument of the same date, given the undersigned borrower, which is me, to secure repayment of a home equity line of credit agreement, which is the 150 pages that I'm going through again, to the corporation that is providing me the HELOC. So in general, it's just creating another aspect of the deed that's go along with the development. So if I default or if something happens, they have some recourse. However, if they foreclose on a property, the first lien, which shouldn't call it first lien, but first in line is the county government. They're going to get their taxes first and foremost. Second is Wells Fargo, who originally helped me with the loan in 2008. And now that I put the second lien mortgage on top of this, they'll be kind of like third in line. All right. And as I stated earlier, the application, I'm gonna go over that later because that's the longest. So next we'll move on to the uniform residential loan lender information. So this section just talks about the lender. It talks about at least one of the borrowers live in the state or within the state in general. It talks about this is a second lien position. This is a refinance type, is a cash out refinance. What else do they have? They have my name, the address. The estate will be held in a fee simple. Now, I think there's different types of states. You may just Google this to see what type of state that you live in. A fee simple state for mortgage or a leasehold state. And I think Georgia, where the property is I think a leasehold. I think no, it's a fee simple state in general. So you want to look up those terms and kind of understand it if you're interested. Let's see what else we have. Manner in which the title will be held. It'll be held by other. This is a mortgage type applied for. I applied for an equity line. The terms of the loan, the note rate is 10.25%. The house that I have the mortgage on is at 6.88%. the house that was paid off was at 6.1118%. So in both instances, my interest rate on the HELOC is higher than both of the mortgages that is placed on, and also the one that was able to be paid off. As I noted earlier, the HELOC can go as low as 4% or as high as 18%. So what I have done is I've decided that I'll replace a 6% loan with a 18% loan, and rather than pay the $438 per month interest only, I'm prepared to pay $754 a month for the loan at 18%. So there's no surprises. I already know upfront that the HELOC can range from 4% to 18%. And right now I'm budgeting and I'm prepared to pay at 18% every month for the loan. Is for 360 months. This is a subordinate lien. So again, it's the second lien position. Amortization, it is a HELOC, adjustable. So it can go between 4% to 18%. And looking at the next section of this is the proposed monthly payment for the property. This is still in the uniform. So this is the part of for the lender. The first mortgage principal and interest with $304.29. That's what I'm replacing. Their proposed was $529, so that's what they estimated initially for the monthly payment. Homeowners insurance, $93.48. I'm taking care of that. That's not anything new. That's still a part of it. Property taxes, $253 a month. That's for the current property that the HELOC is on. Since I purchased the property in 2008, my property taxes are up nearly 300+%. So in considering a home in general, if you don't have one, please make sure you look at the taxes and interest on the properties. The loan itself has stayed steady at $304.15 a month. However, my taxes on this property that I'm putting the HELOC on has risen about 300+%. I have HOA dues. That's about $45 a month on the property. That total, all in all, it came up to about $3,689. All right, that was just this section on the uniform lender. They also had credits on here, which was a part of the HELOC. The original HELOC was $50,000. About $2,300 went to fees of that $50,500, and that left me with a possible $46,929.46 that they wiped out of debt that I was carrying prior to the HELOC. That debt was costing me about $923 a month. With the HELOC interest only for the first 3 years, $499, $438, about a $500 difference. See what else. Okay. And also cash back to me. So when it was all said and done, after they paid off the bills, they wired me a check for $1,209.60. That wired check also cost me $15. So I paid $15 to have that check wired to me, but it's kind of like somewhere inside of the contract. So if you get a HELOC, read your contract. Any money left over, see how they're gonna get that money to you and who's gonna pay for it. I guess they could have Zelled me or transfer the money and not pay a wire fee. But then when I looked at my checking statement, I was charged a $15 wire fee, and it was probably buried into the contract. So that's why that's just something I'm kind of letting you know and y'all can kind of possibly be aware of. All right, notice concerning the furnishing of negative information. This is number furnishing of negative information. That's just one of the documents, and it basically says that we may report information about your account to credit bureaus. Now, we may, they may or may not. For the most part, I think most HELOCs, they do report to the credit bureau. They're calling them credit bureaus. I'm gonna go ahead and call them credit bureaus, but they, I think, really are companies. Bureaus really relate to a government entity or a government agency. These are private companies that they make. Okay, late payments, missed payments, or other defaults on your account may be reflected in your credit report. I don't like to call it my credit report. I prefer to call it a credit profile that private companies have established about me. This marker here is my marker. Credit report, not my credit report. This eraser is my eraser. Credit bureau report, not my credit report. And lastly, this mouse is my mouse. This not my report. So it's just a profile that private companies have created within this capitalist democratic society. All right. Signature, affidavit, and AKA statement. So when they pull my credit reports, there are a number of different names that were on there. So I definitely would, next time when I'm applying for some sort of credit, and you may want to look into your own, look at your free credit report if you obtain it, or any type of credit report, to see how many times your names has occurred. When they pulled the credit report, they found my name three different times. So if you have an opportunity, check out your credit report to see how many times or the different ways that TransUnion, Equifax, or Experian is spelling your name. And I don't know if it made a difference or not, but that's just one of the other sections, the signature, affidavit, and AKA statements. So I signed off that these are pretty much some AKAs. Somehow they got on my report. I should have cleaned it up before this signing of the documents. All right. So the last section, like I said, I rearranged it. So this section is called the Uniform Residential Loan Application section, and it is in total by far the kind of largest section, 9 pages. I'm just going to try to go through it briefly. A lot of the basic information, Social Security, telephone numbers, my address, the rent, where I'm currently residing. One of the things that I should have taken note on the application, they put the total amount of rent. I should have made them probably put my portion of the rent that it would have an impact on my debt to income ratio. So definitely, if you look at a HELOC, if you look at a mortgage, look at if you have a situation where you're paying a portion of the rent on the line, because that impacts your debt to income ratio. It talked about my job, my employer, less than 2 years, so they put the additional employer on there. They went through my financial assets in general, my gross monthly income. Next page, they looked at my credit and liabilities. On this particular page, they looked at the credit and liabilities and also looked at what they were looking to pay off. So on this particular page, they were paying off 1, 2, 3, 4, 5 items that I talked about, totaling about 46,900. They paid off a Capital One card, $300. They paid off the automobile, 6,289. They paid off a Bank of America charge card, 630. They paid off a Navy Federal a loan account. I still maintained the Navy Federal loan account was a pledged loan that I received in order to build up my credit. So I didn't fully close this out. But they wrote a check for about $4,000. I had a little bit more in there. So it paid down the entire Navy Federal pledged loan from about $4,000 to about $97 that I will let go for the next 60 months. It's a 60-month loan. So I've taken out two pledge loans with Navy Federal to build up my credit, to put some installment credit on there, and personal loans. And lastly, they paid the $35,000 for the property. They paid $35,701.46. So all in all, they paid off about $46,900 of my debt that I was carrying, which was about $933 a month, which brought my debt down to $423 a month. So now cash flow has increased about by $500 a month. Okay. They talked about the two additional properties that I have listed, and as I mentioned before, altogether, all three properties that I had mortgages about $144,000. They eliminated that $35,000 one. What else? They talked about the HELOC and the property that is placed on. The balance on the property that they paid for allowing me to get the HELOC on was $28,700. It was appraised at $220,651. The HELOC represents about 22.5% of the appraised value. Now, there are some HELOCs that let you go up to 90 or 95. I think I saw on Navy Federal, I think 95 to 100 on Navy Federal. So I'm considering them also for a HELOC on the other two properties. Let's see. On that page. Declarations. This is a investment property. Yes. I'm not borrowing a transaction to purchase another property. That was a concern to them. I'm not applying for any other loan once they run your credit. I guess you could go look at another loan and have it on the same property. I can consider an issue. About my finances, I am the no co-signer. I didn't have any judgments against me, no defaults, no delinquency, no bankruptcy. Have you conveyed title? I hadn't conveyed title to the property within the last 7 years. Have you had a foreclosed, didn't have a foreclosed property? Have you declared bankruptcy within the past 7 years? No, but I did declare bankruptcy in 2009, I think. I had 4 properties. I lost one in the bankruptcy, but I was able to maintain the 3 and just trying to hold on. But now with the HELOC, it has definitely changed the game for me in terms of my finances. Let's see. Acknowledgement of the agreements. I just acknowledged that I received all these agreements. Military service, no military service, demographics in general, African American, male, all of the demographics was basically volunteer in general. Let's see. And the last page, loan originator information, my signature and the signature of the loan officer, their location, the company location. Company was out of New York in general, and it was a fully online company. It's not a brick and mortar company, it's a fully online company. All right, so that wraps up section 5. I'm gonna divide this up to get our next 5 sections. So today we covered the planned unit development, which basically mean that it's a townhome or it could be a condominium. Uniform residential application, that just means all my data, information, demographics, my finances, bankruptcies. Uniform lender, this just talks about the lender, where their location, assets about the lender. And I'm sorry. Now, one thing about the lender. Now I have the information on the initial lender who I went through and applied. But as soon as the closing was done, about 2 or 3 days later, the lender sold it to a group of investor or an investor or an organization or an entity. But before the ink was dried, the HELOC was sold to another. And that's what this particular company does. I think they're just kind of a middle organization. They grab the low-hanging fruits of the application fees and things of that nature, and immediately it's sold off. There's different types of HELOCs out there. Could I gotten a better HELOC? Possibly. I just was happy and blessed that I finally got one after trying to get one for 5 months. And it's not it is what it is, but it's what I make of it, and hopefully I'm gonna make the best of it. So I'll start on the next section for you and for y'all, and report back out. All right, again, my name is Will, aka Dr. Financial Literacy. I am a political economist. Although we went through all of this, I am not an attorney. I'm not a certified planner or a CPA. And also, I'm sorry, the last two sections, credit reporting, negative information, and a signature affidavit statement. And again, just check out your credit report. Get rid of erroneous information that you don't think that's yours before you apply maybe for a HELOC or a home loan. All right. Thank you very much for stopping by. Have a great day. Bye.